Welcome back to Krown's Crypto Cave, and welcome to the second video of this technical analysis introductory series. This time, we'll be talking about the ever-elusive, the ever-important timeframes. So without further ado, this one's going to be a short one, but very, 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 very important. Of course, never mistake brevity for unimportantness. This is one of those things that we have to understand as traders, as analysts. And over here, as you can see, we are on the daily. And first things first, when talking about time frames, I want to first talk about why it's important and what they represent. So, of course, when we're talking about a time frame, it quite literally represents whatever that specifies. And that's a little bit of a backwards way of saying a daily expresses a day's worth of price action, and hourly expresses 1 hour's worth of price action. You'll notice that on the lower time frames, anything lower than a daily, you will have a little counter on the right-hand side of your chart over here. And that's letting you know when that candlestick, when that time frame closes, is what it's called, when it ends. And then you get a new one. And by the way, if you're not familiar with the daily populates a new one at every day at 8 p.m. Eastern Standard Time, and also the weekly populates a new one every Sunday at 8 p.m. Eastern Standard Time. Just some things to remember, but you can certainly figure it out from judging the actual time of when it begins, of course, and you know, making a little bit of a forwards look on it by just kind of highlighting the next box down here. Anyways, without talking about that, I'd like to talk about the time frames and the importance of them. Of course, when we're talking about lower time frames, going all the way down, you can quite literally go to a minute or a tick chart. This is valid in some sense. I mean, it does represent price action. Every little candlestick represents 1 minute's worth of price action. But is it useful to trade off of? Well, if you are a short-term scalper, it certainly can be. It certainly can be. And I do not want to give you the idea that it's not worthwhile. However, when we're looking at an overall picture of the underlying asset, we really want to be looking at higher time frames. The minute time frame is not going to cut it. It's way too choppy. It moves very, very erratically, and it's not going to give us a full picture of what's going on. So let's go to the next popular time frame, the 5 minute. You can see over here, the 5 minute represents, each candle represents 5 minutes worth of trading action. A little bit better, but still not too much. And I'm just going to run you through them so you can get an idea of what the different ones look like. This is a 10 minute right here. Each candlestick represents 10 minutes. We got a 15 minute right here, 30 minute right here, 45 minute right here. And you can see the price action slowly consolidate. I'm going to put you on an hourly now. There you go. Just getting a slightly smaller. Put it on a 4 hour. There you go. You're getting more information now. 8 hour, 12 hour, and daily. So as you can see, the daily time frame gives you a pretty damn good bird's eye view of what happened over here. Now, of course, you can pull it out, and I'm not, insinuated that you can't just pull it out. But what I'm saying is it gives you a good idea, a good operating system to be looking at the price action over a decent amount of time. This is where I really feel like you can get a good forwards look on this sort of thing. Now, of course, there are certainly time frames that are higher than the daily over here. And just to kind of show them off, we got the 2-day over here. 2-day is certainly very helpful, especially in an asset like Bitcoin, cryptocurrencies which trade 24/7. It does help smooth out some of that price action. Then we have the 3-day, same sort of logic over here, but just a little bit more. And the weekly, of course, the weekly does hold a lot of information about the price action. As you can see over here, you get about almost 10 years worth of price action. So I'll kind of wrap up this talk. Again, a very short video over here, but wrap it up by saying, hey, when in doubt, pull it out. Go to the higher time frame. That's going to give you a better idea of where this thing is going over time. With that said, when trading, understand that the lower time frames, they are more prone to very erratic behavior, as it takes a little bit less to really, throw them off balance, so to say. And the daily is kind of like I might be a little bit overstating this, but the gold standard is the way that I look at it for cryptocurrencies. Now, if we're talking about equities, well, that's going to be, you could use like the weekly or the monthly. But for cryptocurrencies, which are relatively new, the daily is pretty damn good for getting most of the price action. So that's going to do it for this video. I look forward to seeing you in the next one. Take care.